Hello, I'm Bill Callahan, and we're here with our inaugural show, the Callahan Connection, here in Bridgewater. And I have as my guest today Tom Samaras, who is a loan officer for Northeastern Savings Bank with 10 years experience, over 10 years experience in the residential loan business. So we're going to talk a little bit about how to buy that first house, or any house really, but we're going to get into a little bit about it. And hopefully, Tom, you have some answers for us and educate our audience here a little bit. So, oh, by the way, you're a Bridgewater resident.
I am a Bridgewater resident,
which is even better.
Yes, yeah. Me and my family moved here in 2020.
Great. And you have two children.
Two kids, Aubrey and Caden. Yep,
Great.
both in the school system.
Good. And your wife is a teacher?
My wife is a teacher, yes.
Great. Great family. Let's get into it. So the first thing I want to talk about is that whole thing about first-time buyers and people that they don't have a clue, and they have the fear of talking to you because you're a banker, not because you're Tom Samaras, but you're a banker. And you have that, oh boy, what is he going to ask me? So kind of talk about your first meeting with somebody that's never been in the business before, never done a loan.
Well, I think it's the fear of the unknown. Yeah. We kind of go through school, we go through college, we go through the beginning part of our life, and we never have this conversation about what it really means and what the process really is to go through and buy your first house. Yeah. What you need to show, what documentation that you need to provide, and thinking about it, it's a big step because it's a lot of money, especially nowadays with high interest rates and the prices of homes. So it's a very scary situation for a lot of people because they just think that they're just not ready. Yeah. So the beginning conversations is, I tell them about the process, what to expect and set those expectations so they're not worried or they're not going through it and with any other questions. We try to get all those questions out from the very beginning. Now there will be questions throughout the process about things about the process, but realistically I let them know about every little step that they're going to see along the way so they're not confused or they're not caught off guard going through it. Yeah.
I had a loan when I was first in Texas. That was my first loan, but I came back to Brockton and I met with Sylvia Course. Do you remember that name?
I do, yes.
Brockton, yeah, the old Brockton Credit Union.
Brockton Credit Union, yep.
And she was like you. She would just say, come in here and ask for things. Get this for me, get that for me. And she made it comfortable for me. So that's probably, you got to get people to kind of buy into it.
It's all about trust. Yeah. When you're going through this process, you're going to be working with a team. You're going to be working with a real estate agent. You're going to be working with an attorney. And you're going to be working with a lender. You got to go through the process and meet with people. And I always tell people to kind of, don't put all your eggs in one basket. Meet with other people, ask questions, and you want to be able to trust those people because this is a huge step for you financially and for your life, for your kids or your family. Yeah. So it's very important that you're going to go through that process and you're going to feel comfortable throughout the whole way.
So you get somebody in and you kind of you meet with them one time, you might meet with them, again in a month and bring in something else?
So typically the first meeting is all informative and also to set up, to see if they're ready for a pre-approval. Some people you might come in and you start asking the questions, hey, what do you do for work? How long have you been doing it? What do you have saved? Give me a little background on your credit history. If I feel like they're not ready based on those questions and how they answer it, it's all informative, and I'll give them the right tools and the right people to talk to so that we can set up a map or a path in order to get there. Just because you're not there now doesn't mean you're not going to be there later. Yeah. So that's the big thing. But if the customer's what I feel like is ready to start an application, start a pre-approval, we'll start going through that and start going through what we need and what we need to see.
You touched on my favorite topic. Because I'm sure you get the same question. Everybody always asks me about the real estate market, and oftentimes I'll meet with someone that says, "Well, I'd like to buy a house someday." Yeah, but I'm thinking about it. I said, "Well, don't think about it." And I encourage them to call a loan officer and start that conversation. Yep. Whether it's 2 months out, 6 months, even if you think it's going to be 12 months, talk to someone today
Yeah.
And you just said, and you will give them things to do
Yeah.
about credit. You educate them to their credit.
Oh yeah,
Right?
absolutely. It's free. It's free to come see me and
Yeah.
talk to me and get a
And how to
pre-approval.
improve it. What do I do to have better credit? You
Right.
talk to them about that.
Oh, absolutely,
Yeah.
absolutely. It's you can see things on their credit report. Their credit report that we run shows everything. It shows what a missed payment you made 5 years ago if you still have that account open. It shows what you have currently outstanding in any small credit card, whether it's a Target or a bigger credit card, whether it's a Citi or an Amex. We see everything.
School loans.
It's very difficult to hide once you start going through the process anything financially when because we are trained and we're supposed to look at everything because we're lending a substantial amount of money.
90%,
So that's
yeah.
So we have to go through everything. So it's always good for me to be upfront and transparent with the customer, but it's also good for the customer to let the loan officer know everything.
But you're educating them.
Absolutely.
You're telling them you got to do a better job with this account and this account.
Absolutely.
And don't forget the school loan, as I mentioned.
Yes.
Don't forget that.
Yep.
You can't blow it off.
Right.
You
Just
know?
because it's deferred doesn't mean it won't count against you.
Yeah.
There's a lot of different things that go into it that they just might not understand and might not know until they actually have that conversation.
Yeah. I remember way back when I was first house I was late a couple of times, even a day or so late, and I got a phone call saying, you really got to pay attention. That date is pretty important.
Yeah.
And I didn't realize how important it was because if you're over the late date, it gets reported as a late.
Yeah, so it will get reported as a late charge or a late on your credit if you're more than 30 days late on your payment.
Yeah.
So if you have a payment due, we'll just say February 1st, and you didn't make a payment until March 2nd, that is going to get documented on your credit.
Posted,
and
yeah.
anything that you move forward with, anything real estate involved, that will be a blemish on your credit report forever.
So the other thing is people say, I can't afford it. And I get it. The prices are, and now we're probably facing a year now in 24 where the prices may continue to go up again. They were flat for a while, and interest rates a little higher, but hopefully they'll come down. But speak to the number of programs that you have. Like you have FHA financing, you have 3% down, you have 5% down.
Yep.
It's not all 20% down.
No, that's definitely a common misconception of you have to have 20% down to purchase a house. First-time homebuyer programs now you can have as little as 3% down. My first house, me and my wife, we put 3% down on our home, and that was back in 2012.
Correct.
And then on top of that, a program through the town that I bought in at the time it was Brockton. There was a grant that I was able to obtain to help supplement that 3%. So that ended up going a little bit towards the down payment and also the closing costs.
Right.
So out of my pocket was a lot less than I originally thought. And it made it a lot easier to move in and buy furniture and buy all the other things that you need, and also keep some money in the bank for savings. Because as we all know, if you've ever owned a home, things that break in the house or things that you need to be replaced.
You're a homeowner.
You're a homeowner. It's on you. It's rather expensive most of the time.
Now, you mentioned that grant. I just closed on a house in Birchview Ave in Brockton, and the young lady, she got and I don't know the name of the program because I wasn't involved on that side, but a $25,000 grant.
Yep.
Like, it was free to her.
That might be what they call EBP funds. So it's a state program.
It was a state program. Correct, yes.
How we calculate that is if they're qualified, would be a first-time home buyer. It's all based on income.
Right.
Right. So you can't make more than a certain amount, and it's based on a percentage. Typically, it's 80% of the area median income of your town.
Yeah. See, now not a lot of people know about that.
No.
You know about it.
Right.
And if someone takes the time to sit and talk with you, you bring them through the whole menu of loans and loan options.
Yep. We go through all the different loans. We go through all the different programs that they may or may not be qualified for. When they actually apply for a pre-approval and we go through everything, at that point I will know what they qualify or don't qualify for. They also have to understand if they qualify for that program in Brockton, they may not qualify for that program in Bridgewater. It's a different set of numbers.
The income changes.
Correct. So that's something to always think about.
Yeah. But you have all that information.
Have all
you
that
can
information.
tell.
My underwriters do a great job of kind of going through that, and I always verify with them as well to kind of go through that steps. So I'm not giving them any false hope.
Yeah. Okay, let's jump forward. We go from the application. Let's talk about the other unknown is points and closing costs.
Yep.
People don't know what a point is,
Right.
really. And closing costs is like this big thing. It's one term, but it includes a lot of things. Explain that to the audience.
So closing costs are essentially the fees that the bank will charge in order to do the loan. So
Just give me a rundown.
The cost
quick.
of doing business. So there's origination fees. There's processing fees.
It goes to you. Origination fee to you.
The origination, that goes to the bank. Correct.
Yeah.
There's costs to run your credit. Now that has jumped from time to time. I think that's up to that could be anywhere from $50 to $100 to run your credit report. Appraisal fee. There is the attorney fee. So there's going to be an attorney that sits with you at the end to sign all the paperwork. They charge the bank, so we charge it in turn. Charge the customer. There are recording fees with the registry. There are interest fees because in the world of mortgages, you're paying, it's not like when you're paying rent where you're paying on the first for that month. Your mortgage payment that you're making on the first is what you just had for that month. So when you close on the, let's say the 15th of March, your first mortgage payment is not due until May 1st. So you're essentially going a month and a half without a mortgage payment. You got to pay that 15 months of interest in May. To kind of so all the interest is taken care of. So there's all those. There's also escrows, and that's a common thing that people don't really know. First-time home buyers, especially only putting a minimum down payment, you're required to have your insurance and your taxes included in your mortgage payment.
Correct.
So
PIT, I would call it. Principal, interest, tax,
so
insurance.
with having that, we need to set up those accounts. So whenever the city or the town has the bill due, the money's there. And whenever the insurance company is calling that next year, 12 months after you close, for their payment, the money's there as well. So those are also other things that come into account.
I just read an article just yesterday. It was from Mass Association of Realtors, somebody about using those. A lot of people don't like to have the bank escrow that money, but really it's taken every month and it's paid on an annual anniversary date. So it's much easier for the mortgagor, the borrower, to let the bank do it.
It's really set up for their budgeting. You're required to have insurance on a house, and you want insurance on the house, especially living in the Northeast. So we make sure that we have the money set up. We love to have the money escrow because we know it's going to be taken care of. The last thing we want to do is contact a homeowner because they don't have insurance, and then what will end up happening is we'll end up putting what we call forced place insurance on it, and that cost will end up being your cost, and that cost ends up being twice as much, three times as much of what a normal policy would be.
Not a good thing.
No.
And they balance, and the bank balances the escrow account every year. For some reason there's a balance in there.
We do an escrow analysis typically once a year, usually in February. So just because you have and we'll talk about loans, but you have a fixed rate mortgage, the principal and interest never changes, but your mortgage payment from year to year may change because maybe your insurance premium went up one year to the other, or maybe even your taxes. Any homeowner right now has noticed over the last 4 or 5 years their tax bill has increased over that period of time because their value of their property is higher.
That's correct. Okay, now the big one. Talk about credit, and the credit slices are even more important. I understand it's like used to be 7 to 750. Now it's every 25 points or something like that.
So recently they've come out with new standards and new guidelines on credit. So like you said, there were bigger chunks. So if you had a credit score from 740 and above, great. That was considered top tier, what we would call it. Now those pieces are much smaller. So now if you have 760 or higher, 780 or higher, it's much better for you when calculating your interest rate. So having the highest score possible only benefits you for not only your interest rate and what you can finally lock in at that given time, but also too just overall kind of it's a great thing that the underwriters see that this person has a great credit profile and great credit history. The risk isn't as high compared to someone that may have something in the low, in the mid to high 600s.
I was talking with somebody the other day, and when they typically when they quote rates, they're quoting a rate that represents, am I correct, an 800 credit score? Or
yes, you have to be very particular. It's always like you always, you want to read the fine print, right? So whenever you see,
that
whether it's
that credit that's, I mean, that interest rate that's 5.5, or I'm exaggerating, is at that highest credit.
It's probably based on top tier credit with 20% down.
20% down.
Yeah. So when the least amount that you put down, so if you're only putting the minimum down payment and your credit score is lower, you're going to get a much higher interest rate than someone putting 20% down and has top tier credit.
Which makes sense. It's all about
risk,
leverage and the exposure to the bank.
Correct.
So if you're putting 5% down and you're a 650 or 675, you got a ways to go to get to that.
Absolutely, absolutely, and that doesn't go for every single loan. Those are most conventional, Freddie, Fannie Mae. There are some other programs like contacting local banks, credit unions. They may have programs out there that are set up for first-time home buyers. So if the first-time home buyer has a credit score of over 700, they qualify for that rate that's showing.
Yes.
They may get some type of discount based on their income towards closing costs. There may be grants.
Is it FHA? Would that be like an FHA program?
FHA has it's 3.5% down.
Right.
I know, and if people are trying to purchase multifamilies as well, the low down payment.
Owner occupied.
Owner occupied, correct. FHA is allows you to have a lower credit score.
That's what I was
to kind of they go down, I believe, to 580 in some cases. But I mean, you're paying a lot. You're paying your closing costs are higher. You're paying your PMI is going to be high.
Yeah, it's one
a lot
chunk
of those
up
things.
front.
Yeah, you're paying it up front, and you're also paying it every month on the loan. So it becomes very expensive.
Yeah.
If you can get into a conventional with a nice interest rate, I mean that's ideal.
Yeah. Well, that low money down conventional, and I think they do it at 3%. It's still a conventional loan. I think
in the term
3 to 5%.
Yes.
Yeah. But we do a lot of FHA because I think it's because of sometimes the credit gets involved, so it changes the profile of the customer.
Correct, and you're just trying to make it work for the customer. And any single time I meet with them, all I do is take their information that I'm getting, that their income, their pay stubs, their W-2s. I'm taking a look at what they have saved, and I'm giving them whatever options that's available to them. And I put them out there, and I explain them all as best as I can, whatever grants or down payment assistance that's available, and I allow them to make the decision. What works best for you? Do these numbers work? A lot of the times, it's payment shock. They see a $2,000-$3,000 payment, and they're like, I've never had a payment this high. And I say, all right, well, how about this? If you don't feel like you can do it, or if you want to test, every month, try to save this amount of money and put it in a savings account.
Oh, okay.
Save it and put it away.
I'm paying my rent, now I'm going to pay that.
Well, no. Well, it's in that case, I guess you're paying your rent. But in some cases where they're not paying rent, say they're still living with their parents.
Right.
If they're able to save that money and put it into a savings account and still live comfortably, then I think that they feel more comfortable that they're able to make that payment.
I tell you, I know a lot of young people, they'll go and live in South Boston for a while with 2 or 3 roommates, but I know a number of them come back home because they're saving for a house, and they're probably doing exactly what you're saying. They're taking what they think is going to be $2,500, let's call it, and putting in the bank, and getting used to that monthly payment.
Yeah, it's all about getting used to it. I mean, at first you're looking at it and you're just like, how am I ever going to do this? Like, I can't go out anymore. I can't go see my friends. I just got to stay at home. I got to really budget shopping. But eventually, over time, as you progress in your career, you make more and more and more money. It's what you're making at 25 is not what you're going to be making at 35, 40, 50.
Correct.
So the idea is having that loan stay as low as possible, but you're also increasing your financial status and overall becoming easier and easier for you.
Well, you learned that in 2012 when you bought your first house, because you were making a certain salary then, and I'm sure it increased over time. You were with the Brockton Credit Union, and you went through a number of different positions.
Right.
The equity in the property, the appreciation of the property was no doubt going up. It certainly wasn't going down. Probably a little flat a couple of years there. And if the rates changed at all, you always have the opportunity to refinance.
Right.
If it usually they used to say 2 points if it was a 2-point differential, that when it came down, you were always better off to refinance it.
Correct. Yeah, I was lucky enough when we purchased our home. You know, it was in the low 4s at the time. The time we had that home, that was a very good rate.
Yeah.
I know a lot of people are going to be like, oh my God, mine was 10.
13 and a quarter
yeah,
for me.
Yeah. So we were lucky. I never had to touch that. So I never had to refinance. I never did refinance. But at the same time, when we sold our house 5 years later, 6 years later, my value, what I sold my house for and what I bought it for, was a big difference, and good enough where I could, put a bigger down payment on this next house that we
You rolled it into your next house.
Correct. Yep.
Right.
Yep.
Which is tax deferred income. You're not paying any tax, and the government allows you to roll it in.
Just kept it in an account, wait till the house was finished, and then we were able to put that as a down payment.
Yeah, I was 13 and a quarter my first house, and I remember Sylvia calling me into the bank, and what does she want? And it went down to like 11 and a half or some number. And the difference was unbelievable. I said, geez, I might be able to get a little more than pizza.
Yep. And a lot of people do a lot of different things. If it gives them a little bit more flexibility in their financial status, financial life, or they can lower from a 30 to a 20. If the rates change within 3-4 years, you go down from a 30 to a 20. You're very comfortable with that 30 payment, and you go down to a 20. It's the same thing because it's a lower rate.
Yeah.
You're able to pay off the house a lot faster.
Yeah, good point. And that's what you want to do. You want to try to accelerate the payment.
Yep.
Because as it moves if it's in a 30-year mortgage, the longer you're in that loan, more goes towards the principal.
Correct.
Your principal payment's larger. Yep. It's reversed.
Yeah.
People should understand that.
It's not
right?
the same throughout all 360 payments.
Correct.
That changes. The
It's
payment
going like
doesn't.
this.
That changes. Correct.
Yeah,
Yep.
Right. And you can do it even with a 30-year loan. You make an extra payment a year.
Correct.
And it's like making 13 payments, and you can accelerate the loan that way.
Absolutely. Because that will end up all going to principal.
Yeah, this is good. I think we're helping people kind of get a little. We want to get rid of all the mystery.
Correct.
You know, in buying real estate and getting a loan to buy real estate. We don't want that mystery. We don't want fear in the market. We want people to get educated.
No, absolutely. There's no one of the things that they always start with that I always hear is this may be a stupid question. There is no stupid question. It's anything that you want to know is good for you, makes sense for you, is a great question.
Now, I was with a couple the other night and doing a market analysis, and the wife came up with like 4 questions, all really good questions, like things that was kind of next on my list to talk about. And she was spot on. She was pretty sharp. So, yeah, the more information you give people, the better off it is.
Absolutely.
Yeah. Well, this has been great having you here today. And as I said, our first program, Callahan Connection. My guest today has been Tom Samaras with Northeastern Savings Bank. Over 10 years of residential experience. And just look at him. Isn't he a nice guy? Come meet with Tom and get rid of the mystery. Right? Let's get the people educated.
Absolutely.
Thank you very much. And here we are at the Bridgewater Bagel with Kristen D'Agostino, the owner. Kristen, how are you today?
Very good, Bill. How are you?
What do you have up here? Tell us what you served up here.
Well, we have a French toast bagel with cinnamon honey cream cheese, and we have a works bagel with bacon cream cheese, 2 of our popular bagel choices here at Bridgewater Bagel.
And what do we have over here? These guys got some iced coffee.
We have a couple different flavors of iced coffee. We have 16 flavors of iced coffee here. I believe we have a French vanilla for Jeff, and John always does a blueberry.
What did I get then?
You got just a hot black coffee.
Hot black. This is Bridgewater Bagel, and it's right next to the cable store. And the cable guys that are here with us today are here all the time, aren't they?
They are here.
And they're paying customers, though. They're paying customers. Well, this has been great. I think this is good for all the residents of Bridgewater and folks traveling through. Come down and get a bagel, a coffee, and say hello to Kristen.
Thank you, guys.